edition of Weekly Profit Talk, where each and every week we talk about things that affect the bottom line of your private physician's practice. So this week's topic is uncluttering the tax room in the private physician's mind. Actually, I look a little out of focus there. Okay, sorry. That's okay. So this is based on an allegory that keeps running through my mind, and it kind of gets repeated frequently, and the things that I write, because it's a very good metaphor, actually. I'm thinking about when I was a teenager, and I kind of got some grief from my parents because basically kick a path through the things on my floor. And it wasn't a good way to live, honestly, because you've got that sort of thing kicking around inside of your head. It's it gnaws away at you like a little brain worm, and basically you find yourself wishing that something was the way that it should be and not getting that done. Goodness knows they have enough of your precious time taken up with making sure that you are providing the best possible care to each and every patient that you see. But this is something that has significant importance, and I'd like to basically build, if I could, a spare room in your mind for this thing which we cannot avoid, and Ben Franklin says is as necessary as death, which is taxes. If you make more money in a year than you have withholdings for, and you're going to owe at least $1,000 in tax in a year, the United States government actually requires that you make estimated payments or tax payments 4 times a year. You think of this as the entrepreneur's withholding. If you're working a regular job, the people that are on your staff that you're paying a paycheck to and issuing a W-2, well, you're basically taking care of that for them. You're not only paying the employee portion for them, but also the employer taxes as you go. So for them, life is easy because based on the W-4 they've filled out, and hopefully they're not getting huge refunds because you're just letting the government use your money. But there should be enough withheld for them to ensure that they don't owe a bunch of tax at the end of the year, maybe even a small refund, which kind of helps out. So, but for you, the entrepreneur, and if you are a private physician, that's what you are. You are in business, and you need to consider that as a business person, you're going to owe taxes that you don't have withholdings for. Even as an S corporation, where you have some wage withholding for your reasonable compensation, you still have net income left over, hopefully. As a matter of fact, that's the whole point of being an S corporation, is you should be taking a reasonable compensation from your business, but not every single dollar that you make from it. The remaining amount left over is net income, and it's not subject to FICA tax, but it is still subject to income tax, and that's what we're talking about here. If you don't touch this base 4 times a year, the clutter builds up, and I'd like to continue to expand on the metaphor. Basically, you've got this messy room in your mind, and it's not picked up. So obviously, what do people do with something unpleasant? They tend to ignore it, right? But if you do, the Internal Revenue Service, basically, it's a greatest enforcement tool is charging you money after the fact or after the occurrence in the form of interest and penalties, as well as the original liability. And interest continues to build even if penalties do not. Some penalties stop after a certain period of time. Underpayment penalties are basically calculated for each quarter that you underpay, as the name would imply. So the simple thing to do is just to take a look at that as you go. And one of the main reasons also, I'm trying to do this in an order here. So the consequences of deciding that, they're not standing over me. Nobody's cracking a whip, so screw them. It's the government. They'll get it when I'm gosh darn good and ready. So That's great. So let's say that you go ahead with that plan, and you, after taking your reasonable compensation, your private practice has actually earned you, let's say, $100,000 last year. You are going to owe ordinary income tax on that. Depending on your tax bracket, that's going to be several $1,000s. And of course, marital status, stuff like that. If you haven't planned for it and you've blown off paying it throughout the year, then you're going to owe it all at once. You're also going to have an underpayment penalty added to that. The tax software that I prepare for people actually calculates that underpayment penalty so that we're able to just go ahead and pay it along with the tax obligation and avoid the nasty number 10 window envelope the IRS sends 4 weeks later. Hey, by the way, you owe more money. And you're like, do I really owe this? And you get upset and you call somebody like me and you're like, well, yeah, you kind of do. And this is something that you can't get out of. Um, so that's a downside of not paying it. But the other thing is let's say, for example, that you haven't planned for it. So you find yourself owing $5, $6, $8,000 in tax. Well, you don't just have that set aside unless you actually have been doing savings, which you should be anyway. So you find yourself taking it out of your savings account, which you actually should be accumulating money toward your eventual retirement. Or worse, you don't have the money in cash on hand and you end up having to do an installment agreement. Well, that will get you out of lien positions with the IRS, but you're going to pay interest on the outstanding balance of that tax liability until you get it paid off in full. So that's a consequence of not getting it done. Okay. And I don't want that to happen to you. Now, here's the thing, and a benefit to making tax payments as you go and keeping your room cleaned up and able to walk through it. There's a thing we accountants call the matching principle. Now, we've got a whole series of little rules. It's actually called GAAP, for generally accepted accounting principles. And the matching principle is a biggie. And what that says is that expenses, to the extent possible, should be matched to the same month or accounting period within which the revenue was earned that created the expenses. So I think I said that here. So here's the thing is if you have a really good first quarter, January through March, and your estimated tax, you calculate that for the year, and then you divide by 4 to get to a 3-month figure. And if you pay that amount in, let's say a couple $1,000s at that point, then you're basically matching the tax expense to the quarter where you made the money. And that actually makes more good sense. Now, if you're going to do business in the United States, you're going to pay tax. You can't say it's not constitutional. I'm sorry. But this happened before I was born, 1913, in fact. Woodrow Wilson. There's a thing called the 16th Amendment, and taxes are constitutional. I'm sorry. I hate it. Okay, but I'm in this boat with you. So best thing you can do is go with the flow. There's another metaphor. I actually got this from a TV show about a guy racing sailboats. And if you stick anything in the water at all, you kind of screw up the speed. And this is one of those things too, is if you basically keep your sails smooth, you're going to be keeping as much of the money that you've earned as possible where it belongs, in your pocket. So, but the last thing, and it kind of closes the loop on the metaphor here, is when you do have this taken care of, you've made your quarterly payments, and I'll go over the deadlines again. They are April 15th. June 15th is the second one. I know it's only 2 months. Then you go to September 15th, and that's just before the end of the federal fiscal year, which is September 30th. And then you have a final one, January 15th, and you're actually able to make an estimated payment for the entire year. That's the golden goose one. You want to nail that as close as possible. And the object of the game is to, when you file your taxes, owe less than $1,000 or have a refund of less than $1,000. If you owe more than $1,000, obviously, that's not a good situation. So, and that also puts you back in underpayment penalty country. If you get a refund of more than $1,000, that means that you overpaid the Treasury and they got the use of your money instead of you. So I know it's kind of a small thing, and you get a refund of $1,400. I'm not going to give you a hard time. That's great. Okay, but you want to aim for a bullseye. Um, for my clients, I'm actually shooting for 500 500, either owed or refund, $1,000 window. So, and that's if you play darts, that's that metal ring around the red circle in the dead center of the bullseye. So that 500 mark is what I'm shooting for my clients. If you'd like to know more about how I do that for our physician clients, both in business advisory and books and tax compliance, reach out. We are talking to you on one of three different media. You could be watching this on either YouTube, Facebook, or of course LinkedIn. And all three of them have a comment section. So pop something in there because we keep an eye on it. We will respond to you in the same business day or early the next day if it's late or after hours. And also, you can reach me at eric@owingsllc.com. We're able to basically keep thousands of dollars of your precious hard-earned money in your pocket and actually find you additional money with advanced tax strategies as well. So, but the clean room in your mind, there's nothing like it. If you've got everything picked up and you've got that nasty task, who is it? I think Brian Tracy's the coach that talked about eating the frog, which is basically doing the unpleasant task first and getting it cleared and off your plate. You can breathe easier and things go smoother for you in every other facet of your life. So that's what I wanted to share with you today. I hope you enjoyed this. And if you like, please leave a comment. We appreciate that. Give us a like on any of those and reach out if there's anything we can do to help you at all or you have any question. We do enjoy having the conversation. So with that, I hope you have an amazing rest of your Wednesday and rest of your week. And if you're here in Colorado, enjoy the sunshine we're getting after that 4 days of snow. I certainly am. And have an awesome weekend. And if you do have a chance today, do something randomly kind for a stranger. So with that, have an amazing day. And thank you so much.